How's it going, everyone? Hbar is setting up a huge bullish reversal candlestick pattern. In fact, there are a few on the screen right now. We'll start off with the very clear double bottom down over here, which I was the first to call exactly down on that candle, suggesting that Hbar would reverse and protect this low. This is how it will eventually make a new high over the 2025 peak. So with that, it's sent Hbar into a new higher high over this, but we're still under that. So you could argue this is still a lower high and price could continue in a downward direction. But I don't think that is the case, at least yet. I'll need to see this low loss to believe that. But as of now, we want immediate short-term continuation higher. And in today's video, I'm going to show you how exactly that happens. Not that it will, but what it needs to do if you want to see it going up in the immediate short term. So with this double bottom, it has a neckline right there. It's slightly beneath it at the moment, but we can also see few days later there was a dip and then a pullback into that previous area of resistance before continuation lower. So it's not just specifically a line, it's an area of resistance that is shown by the rejection here. So this is going to be our neckline. Let me draw a box through that area for you guys, just like that. And you can see currently right now Hbar sitting on that perfectly. By doing so, it's actually creating another pattern. So I can see, I don't know if you can, a left shoulder, a head, and a right shoulder. Now, technically speaking, if it does lose this key level of support, we're seeing all the moving averages lost. We're seeing the neckline, which was once resistance, looking to turn it into support, again lost. It is negative, but as long as this low holds, it can of course lose this level and recover it, although the probabilities are less in its favor of bullish continuation. Of course, you just want it to be as bullish as possible. You want it to go up in the immediate short term. So it really needs to reverse from here. And yeah, you have that pattern forming to back up that point, as well as it resting on the neckline of the double bottom. The target of the double bottom is measured like that, and it's looking at the previous highs over here. So if I were to place a fib on this range, to break out of this range, a nice precursor signal that it will break that high is breaking past 31 and 35. And once you get up there, you can no longer lose 31 unless there's other necklines. For example, there's a neckline here, as you can see, of the inverse head and shoulders pattern. So it's a different neckline to the double bottom here. And you can see it kind of lines up nicely with where price is at the moment and how long it will take to get up there. It's lining up with that 31 to 35 cent area. So we need to break past that and use that as support. So in this case, it's lining up, but there would be examples, especially if this pattern was not here. All I would say is it genuinely just needs to stick above this, and it will eventually break past 35 cent. And yes, of course, when you're up there, you want 31 to hold the 786, but it can come back down and fall back down to here. It just needs to maintain the double bottom neckline, and you will see the range break to the upside. So we need to look at some targets. Now let's look at that inverse head and shoulders target. We know that the 786, 31 cent needs to break. You measure it just like this, put it on the breakout, wherever that may be in the future. It's just a rough guide because we don't know if it's going to break out on that day. But you can see a general target area, the 1414 and the 1474 Fibonacci, 65 to 69 cent. So we have this bullish falling wedge pattern, which is part of the right shoulder. It's getting constricted. At some point, these two lines would meet if I kept on extending them. And with it being downward sloping, the general break is to the upside, like 2/3 chance that it will break to the upside. And you can say there's another pattern here with this being a bull channel or bull flag or bull pennant. You measure the move into it and you wait for the breakout. Now there's arguments whether you measure it, the target, from the support band or from when it actually breaks out. Either way, you can see it's giving a new high, a new range break. So the expectation would be the very first Fibonacci. In this case, 55 cent, but we know, of course, with how this all works out, we've got the double bottom breakout, meaning that it has the 37, 38 cent target already validated. So at some point that will get met as long as this green box holds support. You've got a second layer of confidence because this is a potential inverse head and shoulders pattern, and that has a separate neckline, which we'll get into. But here you also have the moving average strategy, and this is the final moving average. It is negative to lose because once you see it lost and confirmed as resistance, you do then tend to go lower. But due to the bull market. That's why I had the opportunity to recover it. And even though it lost it one more time, there is that horizontal support that it created. That's what double bottom is. It couldn't lose that on the second occasion, and it gave it an opportunity to recover it. So yes, it could lose this, and it is negative because it is starting a downtrend, and you will get a move down, but a move back up could form before losing this low, essentially. But yeah, you do just want it to reverse from here. The pattern, double bottom pattern target is valid. So the expectation is that this will actually break to the upside. And once it actually breaks through the moving averages and this descending resistance sitting at 22 cent, then it's confirmation that we're now targeting 51 cent, very close to this 1272. So you actually expect that. But along this journey up, even though we're now getting towards this, as we're breaking through here, getting even closer to that, and with this target now valid, it's not actually yet above 31 cent. We need to see 31 cent broken, and that to remain support once it's broken. At that point, you will see continuation. So you've got all the patterns there to get you up there, but it all has to go right, of course. You need Bitcoin, and needs to behave. Because if they come down lower, make sure you check out those videos today, because they're actually at very important reversal points, which is, as you can see, the same case for Hbar. So everything really does need to turn around. And although last weekend was great, that's not what tends to usually happen. Although I would like to see the same thing, to be honest, with how we're set up right now. We do kind of need the remainder of this week/weekend to be positive. Although usually when the stock market is shut, you don't see high volume. But the last week there was. That's why we saw a new all-time high. So let's keep Bitcoin and alts on the same path. Bitcoin needs to reverse from where it is today, and so does Hbar. If you want to see these targets getting met in the immediate short term, they can of course get met, but that could be pushed way further back if this key area is lost. So there's a lot of weight on this level. There's a lot of power on this level. We really need the bulls to step in across the market. Like, subscribe, comment, and share. Now, if you want to get educated and learn this, I can sit with you and do a video call with you on Discord. I can also share my screen. You'll be able to share your screen. So I'm just double checking that you're getting it all right. And then we'll move from there. I've also got an ebook. But if you do want to be part of a community, I have other chart analysts in my Discord, and it's only £20 a month, $25 a month. You also get to, of course, request any chart TA in there for any crypto.